Amazon is at a fascinating crossroads right now. They are spending money on a scale that is, well, it's almost hard to wrap your head around. But here's the big question. Is all this aggressive spending building an untouchable fortress for the future, or is it a colossal blunder that could sink the ship? Okay, let's dive right into this.
So yeah, this is the core puzzle we're going to try and unpack here. On one hand, you've got Amazon's incredible track record of making these brilliant long-term bets that everyone doubts at first. But on the other hand, the numbers we're talking about are just staggering, and the risks are very, very real.
And let's just start with the sheer scale of this bet, right? For 2025 alone, Amazon is planning to spend $125 billion on what they call capital expenditures. And get this, the vast majority of that cash is going straight into building out data centers and the infrastructure needed to power the whole AI revolution.
And here's the immediate trade-off. All that massive spending, it's caused their free cash flow, which is basically the cash a company has left over after paying for big-ticket items like those new data centers, to plummet by 69% in the last year. And that's the conflict right at the heart of their strategy. They're sacrificing cash in the short term, hoping for total dominance in the long term.
So we've got this incredibly high-stakes decision. Is Amazon just running its old playbook, investing like crazy while everyone else is skeptical, all to build an even bigger empire? Or has the game actually changed? To figure that out, we can't just stare at the numbers. We need a way to think about it, a framework.
And that framework is this idea of the economic moat. Honestly, to really understand Amazon's whole investment thesis right now, you first have to understand what a moat is, how you can spot one, and why it's pretty much the key to long-term success in business.
And our guide for this whole thing is Pat Dorsey's classic book, The Little Book That Builds Wealth. It lays out this really powerful, straightforward way to identify truly great companies, and it all starts with this idea of the moat.
So, what on earth is an economic moat? Well, think of a medieval castle. The moat was that big ditch filled with water that protected the castle from invaders, right? In business, it's pretty much the same thing. It's a durable, structural advantage that protects a company's profits from its competitors. And the key word there is durable. We're not talking about a temporary edge. This is something that's baked into the very fabric of the business.
Dorsey's game plan is just beautifully simple. Step 1, and this is the most important part, find companies with these durable moats. Then, and only then, do you worry about the price, hold on for the long haul, and repeat. For our purposes today, we are going to be laser-focused on that critical first step, how to identify the moat.
So, according to Dorsey, there are really only 4 true sources of an economic moat. Think of this as our checklist. Does a company have powerful intangible assets? Are the switching costs for its customers really high? Does it benefit from a network effect? Or does it have a long-lasting cost advantage? That's it.
All right, so now we have our framework. Let's apply it directly to Amazon. We're going to go through our checklist one by one and see if that massive $125 billion spending spree is actually being used to widen a moat that's already there, or maybe even dig a brand new one.
Let's start with number 1, intangible assets. Now, these are the things you can't really touch, like a powerful brand name, patents, or maybe special regulatory licenses that just keep competitors out.
So does Amazon have them? Oh yeah, absolutely. I mean, beyond its world-famous brand, that massive spending we talked about is creating a whole new generation of intangible assets. A huge chunk of that money is going into developing their own custom AI chips, like Trainium and Inferentia. This is powerful tech that competitors literally cannot buy or copy. That's what creates a durable structural advantage in the race to power the next wave of AI.
Okay, next up, switching costs. This is all about how much of a pain it is for customers to take their business somewhere else. If it's a huge hassle to leave, well then a company has pricing power and a really sticky customer base.
And Amazon's strength here is really twofold. For you and me, the consumers, once you're deep in the Prime ecosystem with all your data and movies and everything, leaving feels like a real loss. But for their cloud customers, the businesses, the switching costs are monumental. Companies build their entire operations on AWS. Moving away is this massive, expensive, risky project. And the proof? AWS has a committed customer backlog of over $244 billion. That's a testament to just how locked in their clients really are.
All right, let's move on to the network effect. This one is a really powerful moat where a service actually becomes more valuable the more people use it. Amazon's marketplace is the classic example, right? The more buyers that come to the platform, the more sellers want to be there.
and those sellers offer a wider selection of stuff, which in turn attracts even more buyers. It creates this virtuous cycle that is incredibly difficult for any new competitor to break into.
And now for our final source, cost advantages. This is all about having a structural edge that lets you offer your product or service cheaper than anyone else can. And this is where Amazon's incredible scale truly shines.
And this is where that spending spree directly plugs in and reinforces its cost advantage. Their massive investment in robotics and fulfillment centers creates efficiency in logistics that is just unparalleled. And on the AWS side of things, by developing their own Graviton chips, they can offer computing power that is up to 40% more cost-effective than what rivals using standard processors can offer. They are literally building a cheaper, better mousetrap at a scale that nobody can match.
And here's the proof that the moat is actually working. The proof is in the pudding, as they say. On the left, you can see how the mix of Amazon's businesses is shifting over time. See those green bars? Those represent high-profit businesses like AWS and advertising, and they're growing. Now look at the chart on the right. As that business mix has shifted, the company's overall operating margin, its core profitability, is on a clear upward trend. The moat isn't just a theory. You can see it translating directly to the bottom line.
But it's not enough to just identify a moat. Pat Dorsey also warns us about what he calls mistaken moats, things that look like a competitive advantage but are actually pretty fleeting.
So a real moat, that's a structural part of the business itself, like that network effect we talked about. A mistaken moat, on the other hand, is something temporary, like a hot product or even a brilliant CEO. Look, great management is wonderful to have, but a manager can leave. The structure of the business is what lasts.
Dorsey puts it pretty bluntly. He says you can have the best jockey in the world, but if they're riding a mule, they're not going to win the Kentucky Derby. The quality of the business itself, the horse, that's what matters most for long-term success.
And this brings us to the final and maybe most crucial question. We've pretty much established that Amazon appears to have a wide and widening economic moat. But what is that actually worth to an investor?
And this is the key insight. You can think of it like this. The moat helps you identify a great business, but valuation, that tells you if it's available at a great price. Finding a great company is only half the battle.
Now look, this is definitely not investment advice, but it's a useful snapshot to look at. This table compares some valuation metrics like the PE ratio, which is just a common way to measure how expensive a stock is. You can see how the market is currently pricing Amazon's powerful moat and its future growth compared to its peers.
So, does Amazon's massive spending seem to be fortifying a powerful economic moat? Well, the evidence from Dorsey's framework is pretty compelling. But the ultimate takeaway here isn't just about Amazon. It's about having a new lens, a new way to view any business. So the real question to leave you with is this: what economic moat protects the companies that you know and believe in? Because once you start looking for moats, you'll never see the business world the same way again.